A lot of people found ARK because of Bitcoin in our early days. And so they were in the retail space, individuals who were just buying for their own accounts. What has changed is we are now talking to the major platforms. So we call them wirehouses, so Morgan Stanley, UBS, Merrill Lynch, Wells Fargo, and they are in deep due diligence, like, okay, what is this? We have to have a point of view now. They actually have an index against which they're going to be judged, and that's an ETF, right? Now Bitcoin is part of how they're going to be graded. And while no major platform has yet put any of the spot Bitcoin ETFs on its platform yet, we think that's coming. We can tell from the kinds of questions they're asking. They're asking deep questions, not only about Bitcoin itself, but about infrastructure, ops, risks, and so the heat is on because this is a new asset class. Bitcoin is a new asset class. It's a monetary system, to be sure, but it also represents a new asset class. And what that means in our world is that as a fiduciary, someone looking after portfolios for people, a fiduciary has to consider a new asset class because of the low correlation with other assets in terms of returns and risk. And so if you add Bitcoin to an existing portfolio, if that is right, and this is low correlation asset, what that means is over time, returns per unit of risk will go up. So if one platform has Bitcoin and offers that opportunity of diversification and higher risk-adjusted returns, and another doesn't, then they're going to have a problem if this one's right.
How much bigger does these platforms, how much of a difference would these make?
Well, the ETFs are a wonderful structure. They can scale. You've got an ecosystem. This is not just the 10 companies or how many are still in operation. I don't know if any, I don't think any has outright failed yet, but the ecosystem, the structure is extremely flexible because the authorized participants, the market makers, are not inside one firm. We have dozens of authorized participants, and those are the big brokerage houses. So this is another reason they're being not forced into this, they're being lured into this because the ecosystem, authorized participants, market makers is a very lucrative ecosystem. And these wirehouses host many of them. So I think we could scale to hundreds of billions of dollars. The read was it was not going to be approved. It was absolutely not going to be approved. So what happened? If it were to have been approved the regular way, we would have been getting questions, meaning from the SEC. And no one was getting questions from the SEC beforehand. So that was an indication, no go, just, we'll have to try it again. What happened in 1 week's time, and I truly believe this was one of the things that happened, is there was sentiment evolving around this Fit 21 Act in the House that, wait a minute, this thing is gaining momentum on both sides of the aisle. And wow, this could be an election year issue. This is an election year. So the administration, I think, basically said, oh, and the other thing that happened was former President Trump has become much more cozy with Bitcoin, crypto generally, and that week said he would accept campaign donations in crypto. So again, this idea, this is an election year issue. And then I cannot tell you, I was on the phone with our COO, and he was like, he screamed when he saw this come across, like, what? It was within 3 days of being denied. We were sure. We were sure it was going to be denied. And I think it was this campaign election year. You've got the legislative branch, you've got former President Trump, you had, you know, rapid fire and boom. I don't think the wirehouses will accept, there could be two or these two, maybe Solana, maybe. But I don't think that the wirehouse platforms will want to do more than the majors, right? Just to give their clients exposure to this new asset class. What I do think is, and we have some of these, that private funds are going to sift through the thousands out there and probably find, you know, 20 or 30. But you're going to have to do a tremendous amount of due diligence because, as you say, there's a lot of nonsense going on out there.
And we had President Trump come out and say some very interesting and important things. What's your read on this?
Well, my read, but consider the source, is that Art Laffer is one of his advisors. And Art Laffer and I were just in El Salvador together. So, and I've watched Art's evolution. He's 83 years old. He has served, I think, almost every president, but after his experience with President Nixon, he has never been paid by any of these presidents, and I'm saying on both sides of the aisle. And he is more excited about Bitcoin, and I've known him since 1976. He was my professor at University of Southern California, USC. I have not seen him more excited about anything. He's 83 years old right now, more excited about anything since Proposition 13 in California, which was property tax reform. But he's more excited about this because it has ramifications for the world, not just at that time, California.